Hey folks, what a view behind me. I'm at Blackpool Markets. Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's up, everybody? This is Brinks Trades coming to you live with another breakdown. What's going on, everybody? What's going on? Tony Gold, how's it going, man? Tony, where you calling in from, man? Where you at? Where's everybody? Everybody, we got 20 people on the call today. Where's everybody calling in from? I'd love to know, again, where everybody's based at in the area and around the country, around the world. So, let's see, Skippo. So Skippo hopped on and said, would you recommend a beginner learn to trade EU and GU or NAS100 and US30 first? So honestly, I would recommend, so first off, you got to really figure out what it is, what time slots you're available to trade, right? So if you are going to be a London session trader, I recommend you trading Forex or the Forex pairs, right? So like, even though NAS100 and US30 are Forex, technically they are indices. They're the Forex version of indices. So whatever you in order for you to understand what you should trade first, you should really get a better understanding of your time slot and your availability to trade. So if you know that you can be London session is your time to trade, then maybe, EU or GU might be the one that you want to take a look at the most. If you are only going to be available during New York sessions, then NAS100 and US30 are probably the ones that you would want to look at. Now, if volatility scares you, then you might want to just stay away from the indices and really focus on Euro and GE and GU. I think the thing about volatility too is, like what I teach my students too is we just wrapped up a mentorship like in the last few weeks, and I teach all of them obviously the strategy, but then I also I'm working with them one-on-one. We'll be working with them one-on-one to make sure that they get used to the price action and get used to everything before they even take a trade. And I think volatility, while it can scare you if you're not used to seeing it, I think if you train yourself to get used to a certain level of volatility that you'll see in a pair, it's not as scary. And that's going to be, EU, GU, NAS100, they're all going to have volatility, but NASDAQ and US30 will move quicker, move faster. But yeah, so if you want to see volatility, I would recommend probably if you're scared of volatility or if it makes you uncomfortable, I guess, start with EU or GU first, and then kind of grow your way to NASDAQ and US30. The way I teach is there's a little bit different rules that I apply with my indices versus my Forex stuff. So if you learn from me, you're probably gonna, have some different rules. But if in general, I would probably start with the one, if volatility is an issue for you, I'd start with the one that is less, I guess, scary to you in terms of volatility. All right, psychology, mental tip for new traders. All right, so when it comes to psychology, I think the first thing is being okay. Psychology usually boils down to two things. It's gonna boil down to your fear and it's gonna boil down to your greed, right? So like that's managing those two things. And I tell my students all the time, right? Like, I struggle with both of those aspects to this day. I've been doing this for 10 years. It never goes away. It's always like a monkey on your back that will always be there no matter what you do. And so one thing that you have to learn is how to kind of manage those things at all time, and then always have like a temperature check on your fear and your greed, right? And so there's the obvious things, right? Like the obvious things, like if you're managing your fear, um, you kind of have to talk yourself through it, kind of the same way, like, you know, I don't know, if you're about to jump off of the high dive into a swimming pool or something like that, right? Like you kind of have to coach yourself through it. If you're about to get on a roller coaster and you're scared of heights, you kind of have to talk yourself through it, right? So it's the same thing when it comes to like managing your fear. You kind of have to realize that your fear, you have to talk yourself out of your fear. Like, why am I scared? Why, and usually it's going to deal with some, like, you're either unprepared or you're scared because you're over leveraging, right? And you have too much money on the line, so every little fluctuation in price is really affecting you. So that's a risk management issue, right? So I mean, that's even before you hit buy or sell. You're like, hey, I gotta have proper risk management, and I gotta be cool with the amount that I'm risking, right? So if you're risking 1% of your account, but you're still too scared, and you're really thinking about, man, I need that $100, man, I need to pay my bills, or man, I need that $100 because I just can't lose it. I can't part with have the idea of parting with this $100, and that's too much money for you, right? And so a lot of that fear aspect can be kind of managed by really having checks and balance, right? As far as like what you're doing, what you shouldn't be doing in terms of before you even hit the button. On the opposite end, greed, right? So when we talk about greed, that's and it happens to me too, right? Like I tell everybody this, but again, it still happens to me on a daily basis. There's times where I'm in a trade and I'm up, maybe I might be up $500,000, $2,000, whatever, and it hasn't hit my target yet, and I'm like, okay, screw it, I'm gonna double up, right? I should double up my lot size. That's that greed speaking to you, saying, okay, cool, like you have to manage that aspect. And so a lot of times, what I do is I have if I have my risk, if I'm going to stack positions or if I'm going to add additional positions on, everything is calculated and I'm decreasing my risk as I add, right? To kind of manage that greed piece, because we know there's going to be pullbacks in price. We know the price never goes directly I mean, sometimes it does, but hardly ever goes directly from your entry to your take profit. You're usually going to start in some type of drawdown. You're usually going to be in some drawdown during the trade, right? And so, when you're stacking extra positions and you're like, screw it, doubling up like in the middle of the run, um, because you just want to make more money, um, you have to know that things can pull back on you. You have to kind of manage those things ahead of time. A lot of emotions are going to be managing. I'm sorry, manage a lot of managing your psychology is going to be doing the stuff before you even hit buy and sell. Am I managing my risk right? I teach all of my traders as they're going through it. I have this thing called it's like an order drill, basically, where I'm mapping out an entry, my exit, and I make all my traders go back into charts, and I make them dig up like old setups and old data, and I'm walking them through, and I'm saying like, okay, what are the reasons that you'd still want to stay in this trade? Okay, cool, write it. And I literally have, like, when I first started trading, I literally had a notepad, and I was like, okay, cool, well, we're still making higher highs, or, these levels are still being respected. And, the market hasn't really given us any signs that it's breaking structure and going the other way. Like, I have all a checklist full of things that I'm walking myself through. And now I don't write them down. And usually I just kind of talk through them to myself. Um, and so when I do that, it kind of helps me and helps me relax, um, as far as like managing all that stuff. So that's some things I would say, like, don't try to over leverage, right? Sometimes if you're scared to push the button, or if you're scared, like you want to close out early before price hits your target, ask yourself, why do I think the price should go to where I think it's going to go? Right. And I think that usually helps me a lot. And then just practice, man, like managing psychology will always come down to like practicing and journaling. Everybody says get a trade journal. A lot of people don't get emotion journals, right? And so like I tell everybody that I teach, or just anybody really, like, have that trade journal needs to include your emotions too. Like, because you're gonna see a pattern. Like all those trades, when I first started trading, all of my trades where I would lose or blow an account, I would do the same things over and over and over again. I would probably double up when I would lose a trade, or I would, double up in winning trades and then turn against me. Um, there's a bunch of things that I would do over and over and over again emotionally, and I never really caught it until I wrote it down. I would say, okay, cool. Well, all my trades that I lost, or all my accounts that I blew, like when my first year of trading, like it came because I over leveraged because I thought I was going to make a shit ton of money, right? So keeping an emotional journal, you're going to start to see, man, I'm really a greedy trader. Like I'm trying to squeeze everything out of this run, right? And then, you got to calm yourself down and let yourself know, hey, like maybe I'm not, you're not going to be rich off of one trade. Like nobody, I don't care what trader you've seen, any trader that you've seen get interviewed on Trading Nut or some of the other platforms, me, like you're not going to get rich in one trade. If you see somebody make $100,000 in a trade or $50,000 or some life-changing money, just know that that's not their first trade, and they've probably been doing this for a long time, right? And they have a lot of money to risk, and that's the other side too. If you don't have a lot of money to risk, don't risk money that you can't lose. And that's such a simple thing, and it's like the standard advice, but it's really important because right now, if I take a trade and I risk $1,000, $2,000, I'm perfectly okay looking myself in the mirror and saying, okay, I lost $1,000 today trading. Cool. I don't care, because I know that my skill set is set that, one, if I lose, I'm gonna get it back. I on average win about 70% of my trades. So like 68% of my trades, almost 70. So I know that that one loss is gonna happen, 30% of the time. And so how do I manage that? But that means probably gonna turn around and win in the next 60. And that's just my numbers and my stats. Obviously everybody's gonna be different. But how do you manage that loss, and are you okay with losing that money that you have? I'm perfectly okay with going into a trade and losing $1,000 or $2,000 per position, because that's just where I'm at with my money. So don't lose money you can't have. And I think, don't lose money that you cannot mentally afford to lose. And it doesn't even matter if you can afford it, but sometimes you could be rich and the idea of losing $100 just kills you, right? So that type of thing too. How to learn from you. Tehran said that. And then, hi, when's the next mentorship? So the next mentorship, I have no idea when the next mentorship is going to be. I'm thinking it's going to probably be this. If I do another one this year, it's going to be this fall. But I really want to make sure that I'm kind of tending to the people that are my current students, and making sure they're good before I move on. So yeah, and it's been crazy to see. I actually posted a chat. There was actually a chat or chat message conversation that we are having, I think on Thursday, and I posted a position, I broke it down, and at the same time, two or three other people are posting in the chat, hey man, I took the same setup on a different chart or a different pair, or man, I was in this trade too. And so the way that I teach my students is I don't give signals. I don't believe in giving signals, because I want you guys to learn. I actually want you guys to be able to walk away and say, I know how to do this now. This is where I think the market's going to go. And usually it takes like a year or two. You got to see a market in a bull cycle and a bear cycle and consolidated cycles really to get an understanding of what to do in each of those situations. But my students, man, like they're getting good. I got a couple students that I think in a year or two are going to be really, really good. And so it's been really fun to watch them grow. I actually had a few. My first student passed one of his funded challenges this past week, and so I don't have a lot. Total transparency, I think it's like my mentorship has been around. I've did a few different mentorships for a few different people. The first one I taught was like 100 students. The second one, I took a smaller group of people. It was like 20, and I think like now it's like 16. I think in the last mentorship that I did. So really, it's a really small group of traders, and it's really kind of like I work hands-on with everybody, and I try to. So yeah, so it's been really fun to watch them grow. But I had my first official, there's probably been others, but my first official trader pass a futures prop firm, so with Apex, and that was like a week or two ago. So that's been really cool to watch them grow. So it's going to be really cool to see how everybody progresses in the future. But I'm cool with keep answering questions, or we can go ahead and get into the charts. So if you guys have questions, feel free to drop them in the charts or in the chat as we keep going. Oops. So let me share my screen. So let's see what's going on with the markets. In total transparency, this past week or two, I have not actively traded as much. I will be doing live sessions next week. The goal is Tuesday through Thursday. If they get canceled, then I'll let you guys know. But I want to be as transparent as possible. In this trading space, there's not a lot of people that are transparent, and I hate it. And so one of the reasons that I do this, even these calls right here, is I want everybody to hold me accountable, right? I want everybody to look at me and say, okay, cool, Blake knows what he's doing, or he doesn't know what he's doing, right? And so the same thing when I do these live sessions. They're going to be an opportunity to, again, see how I trade. I'm not going to go into full detail with everything that I do with my students because that's reserved for them. But you're gonna be able to come to the table and say, okay, Blake can either really trade or he can't, and that's okay. Either way. But so what I want to do is just kind of go through everything again. If you're new here, Brinks Trades, 10-year day trader. And I obviously went through a lot of ups and downs to get to the place where I'm at. Currently, I am over 500,000 funded in futures accounts, and then about 700,000 in Forex accounts. I'm not sure, total transparency, what's going to happen with the Forex space when it comes to prop firms. There's a lot of crazy stuff going on, and I don't really trust it, so I haven't really been trading those accounts as much. But yeah, I'm more aligning myself with futures, and then really just trying to ultimately grow a personal account to the point where I can just focus on that. That's kind of my goals as a trader. I got a prop firm space. I love it, and I love it as long as it cooperates. But I love the idea of me being able to trade my own funds full time and making that my own thing. So, so this is where we're at for dollar. Again, we start with dollar so we can get a better understanding of what's going on with the currencies and the indices. So there's a couple things that happened. So last week I wanted to see, over the past couple weeks, I've been calling this out, where I wanted to see the market really run higher. And initially I thought we could potentially look at this fair value gap and to continue to go higher. Again, one thing that I teach my students all the time is that when I'm looking at a series of imbalances, I always anticipate and am ready for price to react to the first gap. But then also if there's a secondary one, I make a note of that as well. And I think that's what's happening here. So the secondary imbalance right here is where price really stabbed down. It also overlaps with this inverted fair value gap here that price has been running into. It really ran down a consequent encroachment on the dot and then ran back on that level. And this red zone, I think, is weekly consequent encroachment. Yeah, weekly consequent encroachment. So it ran down to that level on the dot and then just turned around. So that's a good sign. Again, I'm waiting to see what happens here. On this level here. Ideally, I would like for price to continue to go higher. So ideally next week, I would want to see the market align with this and really potentially use that level to continue to go higher. There's a couple imbalances here, this green one, and then also, well, I think the green one is the main one. So I'm really looking to see how the market reacts at this level. One thing that I talk about all the time with my students is this idea of equilibrium. And when price trades around an equilibrium level, it's really hard to kind of know what the market's going to do next. So ideally, I want to see the market. This is the idea that I want to see the market do, and that'll be confirmed if we start trading over this level here. So if it doesn't, I mean, obviously I don't trade dollar, I just kind of use it as an index, but that's ideally what I want to see from dollar. So I'm still bullish, but really want to see us trade above the consequent encroachment of this old imbalance. So with that being said, I want to run to NASDAQ. Let me do this real quick. I just want to make that smaller so I can go back to the comment section. Okay. Yep. I see you guys. Yep. Sorry. I see it. Why is it not sharing? Okay. Let me try this. Let me try this. So I got to run back to the comment section. Okay, so okay, so let me explain that again. So a couple of things. So over the past few weeks on dollar, ideally I've been saying I want to see bullish prices on this. That's what I've been ideally saying. Go to the weekly time frame. There's a couple of things that we've been seeing on the weekly. There's been this imbalance here, right here, from this low to this high that I want to see the market continue to respect, and I really want price to trade over that. So I'm gonna get rid of that there so you guys can see, and then put a comment section. Okay, cool. You guys can give me a thumbs up if you can see what's going on here. You should be seeing dollar index. So let me know if you can't see that. Because all I'm seeing right now is I'm still staring at the wrong screen, but it looks like I'm sharing the right screen on here. So you should see dollar index, and it should be like the weekly chart. So again, drop some comments in there if you can see it. Okay, awesome, Sheila. Cool. All right, so again, the daily time frame, we want to see the market run like this and really run higher. This is what I'm looking to see. This level here is going to be the level that is going to be really difficult to predict. Again, I teach my students all the time when we're trading with this idea of equilibrium around that 50% level. It gets really hard to know when the market's going to do next. And so sometimes you have to react. But ideally, I would like to see the market do something like this over the next few weeks, right? And continue to run higher. But if we fail to really trade above consequent encroachment, that might change. So I'm really looking to see this, but I need to see this trade over consequent encroachment to really get in line with this. So that's what I'm looking at. For NASDAQ, for dollar, let me go to NASDAQ and see what's going on here. So last week we said this is our short-term target. So this is the target level that we wanted to hit. And we ended up getting that. And I said on the way to our long-term goal. So this was, again, last week's target. We wanted to see this high taken out. Long-term target goal is here. So we go to that 4-hour chart. And let's go back down. Zoom in. Go here. Again, over the past few weeks, I wanted to see when the market started dropping down and taking out and breaking structure here. I told a lot of people that a lot of people in the chat, and not in the chat, but just even in the mentorship group and some of the other places that I've seen online, saw this as a break of structure and they wanted to keep shorting this. And I explained to them kind of like the overarching concept of power of three and why I wanted to see this market continue to go higher. And again, if any students are watching this, I know Shayla's on here, but if any students are watching this, again, power three is clearly at play, right? So I wanted to see this run higher. And I said the main level that I wanted to see disrespected was this old inverted fair value gap, right? Or in fair value gap that is now an inverted fair value gap. And so I wanted to see this disrespected. And ideally, last week, I wanted to see the market pull back a little bit and then really run through this. We didn't get that. So we ended up running through and keep going. And so this last week was a good exercise in like how to trade when your overall pullback level isn't respected. And so explaining that to them was kind of a cool exercise. And I'm sure later on today, when we do our group call for the mentorship, I guess you guys will probably have some questions about that. But either way, anyway, so this is the target that I wanted to see hit. I wanted to see the market run for this high. And we pretty much hit that on the dot. Like Friday, we ran through it. Thursday gave us a good set of relative equal highs right there. And so we ended up running right through that, which was really cool to see. And obviously it's kind of leading itself to that bullish bias. So with that being said, now that we've ran through this level, what I'm looking for to happen next is 8:30. Okay, so what I want to see happen next is I want to see the market really grab some level and then keep running higher to start the week off. So I'm looking for something like this. We might even get a retest as low as this old imbalance here, right? And I'll be looking to see what happens if price hits this high, but ultimately I'm still very much bullish, and I would like to see the market run to this high level, which is the long-term goal. Okay, so that's what I would want to see. I don't really see anything that I think the market can run to. Yeah. Ideally, I want to see this really just kind of take off and go. I don't really see anything here. Obviously, anything can change between now and like Monday when I start actually looking for positions. But yeah, I don't really see anything as far as a level that I'm comfortable calling out. Well, no, let me take that back. I don't see anything as far as areas where I know for certain price will run back to. So ideally, what I would like to see is the market really come down to this low here. I'll be looking at this low at 18,097 and or the retest of that old gap to continue to run higher. I'm still bullish. On this. So that's what I would ideally like to see happen on the way to this long-term high. This will be short-term target for this week. We could make a run. We could get a run all the way up here, but move that there. I want to see that happen at best. So really 18,367 is where I'm looking at. We could just see a run all the way through that high. And so yeah. If we break structure, if we break structure and we take out this low and really kind of we find ourselves trading back underneath this consequent encroachment again, then this is going to be like my invalidation level, I think. And we might see a deeper bearish run. I don't think we'll go this low, but we could. So this is like, so whenever I trade, I like to have a level that is the invalidation level, basically meaning that like my bias is wrong for the week. And if that's the case and I'm flat for the week, I'm usually not trying to change my trading strategy, but I'm going to be looking to continue to buy. And again, if price really closes below here, it can wick, but if it really gets a strong close below that level, then I'm probably gonna say my bullish idea was wrong for this week, and then we usually call it a week, and this week will just be an L. So that's what I'm thinking for NASDAQ. But again, overarching idea here, we had a very clean opportunity to trade off of this high, and it gave us a little bit different setup than we wanted to see. We wanted to see the market pull down to this level, and we didn't quite get that. So you gotta be able to read the market in real time and kind of get a better understanding of where it's going. So cool. MNQ, I'm sorry, ES, same setup I think we had, where the market really gave us bullish action to start the week off. I don't think it was this one. Yep. So we're kind of just ran for our short-term target on the way to the long-term high. And if we zoom in here, we can see that the market took out this high and it ran straight through. And I think it gave us, they didn't really give us the setup exactly that we wanted to see. We wanted to see the market pull back and respect. And it didn't really do that. It just kind of took off, which is cool. But you got to know how to react when the market hits that high, or when it doesn't pull back necessarily to the level that you want to see. So ideally I wanted to see the market. Yeah, so I wanted to see the market stay above a few levels. Like I wanted to see it close above consequent encroachment of this wick or trade down to this old imbalance. We didn't quite get that low. We kind of just took off, which is again cool, because it obviously clearly respected both those levels. It didn't go down and touch those levels, but it stayed above it, which is what we wanted to see, and on the way to the short-term target. So that was what was really cool. But for this week, same thing. I'm looking for the market to really run through. I'd like to see the market do something like this, right? Where it does something like this. Maybe spends Sunday, Monday, Tuesday in this box, and then continues to attack. The first kind of short-term target on the way to this, for this pair, I'm going to have a couple. This is going to be the level that I'll be looking, actually a couple levels. So I want to see consequent encroachment of this wick. And this will kind of help me give an idea of what's going on. If we fail to get above this level here, like if we really have a hard time breaking and closing above this level, again, it's going to be a sign that the market might just turn around and fall over. This will be the first short-term target at 5,239. The second short-term target will be 5,257. I don't know if we'll get here all in 1 week, but I'm just kind of looking at these two levels. And then I'm also noting that the price had a really hard time breaking through that CE level as well. So these are things that I'm just looking at, but it definitely, I'd say if we fail to respect this wick here, this will be my invalidation level. Meaning that if we get a convincing close below that level, then I most likely will call it a week. And my bias will probably be wrong. So let me go to Slash De La Soul said, have you analyzed NASDAQ? I analyzed NASDAQ already. I'm bullish. I'll pull it back up before we get done. Diana Nakunda said, apologize if I'm butchering your name. Where are some materials you can go to learn about futures? Google's always a good platform. If you join my Telegram chat, which I'll share a link to in a second, I usually do some updated stuff. Or, if you want to learn from me, I will be opening up the mentorships probably again later on this fall. So, all right. So, bet. So let me go back to this second short term target is where I'm looking for. So I'll be looking for a price to pull back in here. Ideally respect consequent encroachment. This is a very strong fair value gap. It has an order block right next to it. So it's going to be the strongest form of FVGs that we can run into. So I'd like to see the market do something like this. And I'll be looking at all these levels to see how we react once we hit them. Oops. So that's that. And the last one I want to touch on is Dow Jones. Where is the Dow Jones? Okay, cool. Did I do yeah, Dow Jones is doesn't matter if you're looking at, okay, cool. Let's look at this one. So ideally, this is the weekly target, the all-time target that we're trying to run for is the all-time high. I really wanted to see how the market is reacting to this. So we've came here to this volume imbalance and really haven't hit it yet. So I really want to see the market run for that. Okay, cool. So ideally what I want to see here is the market do something like this. So I want to see something like that happen where the market runs here, pulls back into this level and really attacks that volume imbalance. Depending on what happens here, there also is a secondary fair value gap right here from this low to this high, which kind of overlaps that. So this is going to be a zone where I'm definitely going to want to see the market pull back and trade into and stop. So I'm going to be looking to buy here. And if we get that, then cool. If we don't, then, you got to make adjustments, kind of like on NASDAQ this week. Or this past week. So ideally I want to see the market trade there on the way to the weekly target high. So this will be my target. Just say so yeah, that's what I want to see on Dow Jones. So let me pause there. Again, I'm looking for price to pull back into that 39,525 range and then run at least to 39,800 to 40. So short, very small play potentially this week, but ultimately we could see an extended run higher into this old imbalance here on the way to the weekly target. So that's kind of what I would like to see happen. But we'll see. Let me go to the comment section and see what's going on. Let me go back to NASDAQ here so that person can see what's going on. NASDAQ, again, I want to see, I want to see the market run for this level. The only reason I'm looking at the Forex one is just because there's less gaps, so it's a little more clear. So ideally I want to see something like this where the market runs as low as potentially this low last week's or Friday's low. It could run back into this fair value gap again. You could see that happen, but I think we might be done here. But ideally, as long as we stay above consequent encroachment and close above it, I think we're in a good spot. So we could see something like where it runs back here again. But ideally, you want to see that run up and really attack obviously last week's high as the first target, but then ultimately on the way to the 18,356 level. So I'll make a note of this as well. So I want to see this. And that level is 18,257. And again, CE level here at this. I'm only really measuring CE because I want the market to stay above this level. And so this level is 18,205. So if we stay above those levels, then that's going to be a great sign as far as us continuing bullishness. If we don't, then it is what it is. And it kind of invalidates. Well, it doesn't invalidate, but it makes us kind of hold the brakes on trading higher until we really see a good break above that consequent encroachment. So yes, that's what I'm looking for NASDAQ this week. If anybody has any other questions, feel free to drop them in the chat and we can kind of break them down from there. So someone asks, how do we calculate lot size? So a lot of times when I'm trading with my future stuff, how I calculate a trade order should come right here. Actually, let me pause my screen. I'll show you. I'm going to log into my practice account so I can show you. Stop screen. Log in. I don't need everybody to know my trading stuff. Trading panel. Paper trading. Connect. Share screen again. Boom. So you can see this. I mean, it's obviously my username, but you can't, don't need my password on here. So um, I guess I'm still in the trade. I use this account to mess around, and a lot of times, another thing about controlling like risk management is that there's a lot of times where I will like uh, have a paper account on the side because sometimes you get that itch to get into a trade and you don't really want to press the button. Um, you don't really want to press the button on your real account, and so you might have, for me, usually it's because I hit my targets for the day or it's a day that I know that I shouldn't be trading on. And so sometimes I do want to take that urge to trade. And so this is like my paper trading account that I use that I don't know. I think I built this up from like $200,000 or something like that, paper balance, whatever. It doesn't matter. It's not real money. So um, anyway, so uh, yeah, so how I calculate a trade is I will hit trade, create a new order. This will pop up right here, right? You can see it's paper trading. If you want to risk, let's say you want to get into a trade at the current level on NASDAQ. So you hit your take profit and your stop loss levels. You'll type that in, and then you'll type in how much you want to risk, and it'll say percent risk. You can change it to balance if you want to just do money instead, but I always do percent. And so I type in, whatever unit it gives me. Like if I say I want to type in like 20 units or 20,000 units or something like that, that's basically 1% of my overall balance, which is stupidly high. So that's why the units are stupidly high. But this kind of lets you know like how to calculate your risk. So usually when I'm entering a position, I'm there, I have this pulled up and I'm right there and I'm like, boom. I'm just typing in the levels and my stop loss level. It's not always my take profit level. I kind of manage that on my own sometimes, but the stop loss level, and the take profit level. I'm sorry, the stop loss level is always put in there, and it gives me an overall risk of like risking 1% of my account or 2% or whatever the number is that I'm trying to risk. So that's usually how I calculate that. It's a good tool to play around with. US30. So Dina, US30 is going to be very similar to my MY, which is the Dow Jones. It's pretty much the same thing. So like if you look at if you look at Dow Jones and you look at US30, it's the same. It's the same, right? So Dow Jones is essentially the forex version of Dow Jones is US30. The futures version of Dow Jones is MYM1. So it's the same asset you're trading. The numbers are a little bit off because the volumes are going to be a little different. But yeah, again, if I do the same thing, you can see there's really no difference here, right? It's the same thing. So ideally, whatever I said for this Dow Jones, I want this to go higher and run. That's probably going to be the same case there, except instead of a volume imbalance, it's an old civvy. So same idea. I want to see the market trade into this range here. Go higher. That's ideally what I want to see happen. We'll see what happens this week. So, yep. Can you do gold, Kenneth? I think this is this Michigan, Kenneth? I think that's you. If not, cool, my bad. All right, bet. So let me do gold. So the thing about gold, I don't trade gold. And I tell everybody not to trade gold because it's an event-driven market, and sometimes technicals. Like I think a lot of people like the idea of trading gold because it's gold. It just sounds cool. Like I trade gold, but it's not really an event-driven. It's an event-driven market, so usually it's gonna happen move based on like the actual events. Whereas there's other things, the market makers or other entities, um, who kind of run the markets are kind of looking at when they evaluate and kind of buy and sell these other currencies or other assets. But ideally, I mean, it looks like gold's making all-time highs here. I mean, I must have called an analysis on this a while back because I don't even remember doing this. But those highs, yeah. Anyway, so hmm. Yeah. Anyway, so yeah, I was kind of getting ahead of myself there, but ideally, this is what I would like to see. That's the high that I'm aiming for this week. I want to see the market run. It could run as low as here, this level here, but I like this level. Or it could run as deep as this level. It might just go here and turn around and stop. But I'll be looking somewhere in here to turn around and really target the high, like this high. So that's kind of what I would see if I wanted to trade gold. I think something around there. Either this imbalance here or that imbalance there is where I'll be looking to buy at. Something like that. So around that 2,342 level or that 2,356 level. So somewhere around there is what I would want to see. So yeah, so that's pretty much all I got for you guys. Again, I don't trade gold, so that's the one. Take it with a grain of salt. It's an event-driven market. It doesn't move as much unless there's like crazy times. And so like right now, there's a lot of stuff geopolitically that's popping off. So it's probably why you're seeing a run like this. I mean, think about all the events that have happened over the last 2 years. But yeah. So that's all I got for you guys. If you guys have any questions at all, let me know. I'll stay on for a couple minutes if in case anybody does, but I think that's about it. As far as breakdowns, hopefully everybody enjoyed this. If you did, please give a like to the video. It definitely helps the Trading Nut podcast say, hey, Blake deserves to keep doing these. Again, if you are familiar with the way that I trade, or if you want to see me actually trade, live, I'm going to be going live on my YouTube a couple days a week. Again, it's not really I'm not doing this for signals or to give signals to anybody, but I'm really just trying to show people kind of like what's possible trading and how I actually walk through some of this stuff. I'm not going to give away everything because again, my students, the ones that have kind of like trusted me with time and money. So I'm not going to give away everything for them just because I feel like it's kind of disrespectful to them. But I will, you will at least see everything live. So it'll be live session. It'll be on YouTube and it'll be recorded. So my mentorship, I mean, the last mentorship we did, I think it was, I kind of did as a give back. But my next mentorship won't be until like probably the fall at the latest, maybe like August, September timeframe. So yeah, I'll let people know as we get closer to the date if anybody's interested, but it is something that I give, my time to. So, and I teach them one-on-one. So until then, I won't really have anybody new in the mentorship. And I really just want to make sure the traders got it. So how can I book personal coaching? Shoot me a message on Telegram. We can talk about it. Like I said, my goal here is to again work with the students that I currently have. If anybody wants to, if you're not in the Telegram, there's a Telegram. I just shot a message there. But if my goal again is to really work with students one-on-one. So if I'm doing like personal mentorship or personal coaching outside of like what I do in the mentorships, that might honestly, it's my time, so it might be a little more expensive. And I'm not really trying to like take advantage of anybody here. So, shoot me a message. I guess we could talk about it. If anybody's interested in that, maybe I can get a list of people that would be. and we can kind of take things from there. But again, the next mentorship will probably be this fall. So that'll be kind of where I'm focusing at. If you're trying to learn in a group setting, a smaller group setting, that's usually where it'll be. So okay, cool. So yeah, if you have any questions about any of that stuff, just shoot me a message on there, and we'll go from there. But I hope everybody enjoyed the breakdowns, and I hope everybody had a good trading week this past week, and a good one coming up this next week. So talk to you guys next weekend, and have a good week. Peace.